Okay, 6:33. I'll let people in as and when they join. Welcome everybody. I'm going to introduce you to Nathan. Nathan will do the presentation. Just to let you know that we engaged Nathan through funding. Oh, here we go. Some people coming in. Just 1 second. Yep. So Wimco obtained some funding through Rothschilds. We see financial planning as key to most of us, and so they've kindly given us a grant for 3 years. So Nathan, we recruited Nathan. How many months ago? About 6 months ago, Nathan.
About 6 months ago, yeah.
Yeah, and he's now just building up the client base and all the community. So please pass on Nathan's details because we want to spread the word because we think we know finance is really important for everybody. Even I'm an accountant and I need financial advice. So okay, over to you, Nathan. Do you want to take the floor?
Yeah, absolutely. Let me get my screen up and running. And let me know if you can see this okay.
Yeah.
Yeah. Okay. Thank you, Brian. Thank you for that introduction. Yeah, as you said, funding from the Rothschilds Foundation, working with Wicked Multicultural Organization. This presentation today is mainly about two things, two main points I want to get across. The first is I want to give you a better idea about how I personally can help support you via the Wicked Multicultural Organization. But secondly, is a little bit of financial education. So understanding some basics around financial planning, which will also help you understand how to get better control of your finances. We're going to run through it, going to go straight into it because I'm not going to keep you too long. So let's get going. Right. Quickly going to cover what we're going to cover today specifically. The first thing is what is financial planning? So what do I do as a day job? Trying to understand how my work as financial planner can help sort of ease or how it moves into the work I do with Wimco. The different areas of financial planning, because understanding how to control your finances, how to understand your finances better, you need to understand the landscape of how financial planning works. And the landscape basically provides different areas. All right, we're going to go through that a little bit. The financial education part of the presentation will be around the difference between financial products, investments, and debt. Understanding that blueprint is the key to understanding how to control your finances, how to plan your finances, and essentially gives you a better understanding that you don't need to be a financial expert to run your finances. You need to understand the landscape, the tools, and how you utilize those tools to be more efficient in your financial planning. You don't need to understand exactly what things do, just that they can do something for you, for your benefit. One of those things are wills and power of attorney, like I've just said. You don't need to understand wills and lasting power of attorney. You don't need to understand every in and out or be an expert. You just need to understand that they can benefit you. And I've invited an expert that I work with, Ed, who's going to give you a little bit of a 5-minute presentation on specifically on wills and power of attorney. And after I've gone through all of that in terms of how the products work, we're going to speak a little bit about a specific product, which is equity release. And then I'm going to invite you to another talk that another expert can provide you with more information if you're interested. Okay. So firstly, just a quick little bit about myself. As I said, my name is Nathan Gonsalves-Williams. Been in the industry for about over a decade now, 12 years, working as a financial planner specifically. I work with, at my day job as a financial advisor, I work at St. James's Place Wealth Management. I specialize in pensions and insurance. About 80% of the work I do is around pensions and insurance. Grew up in North London. parents are Jamaican and Guyanese, and I'm now living in Aylesbury with my family. Now, one of the main reasons why I wanted to work with the Wicked Multicultural Organization is because I could see that in our community, there is a lack of financial education, a huge lack of financial education, but also the other way, I think people in our community are quite mistrusting of financial experts, and for good reason, because there's no one in our community really who is out there just speaking about how it works. How do investments work? How does, equity release work, mortgages? These are very broad financial tools you can utilize, but no one's teaching us about how we can use them. We're just using them whenever it makes sense. So this isn't about, getting rich quickly. It's not even about making more money. It's actually about planning your finances effectively, because we are losing money every single day because we're paying too much tax or not taking advantage of really simple opportunities, like utilizing the stock market to our advantage, or getting the wrong types of insurance, getting the wrong types of mortgages, not claiming the correct benefits, not utilizing financial products correctly. So my goal here is to support and guide you to make better financial decisions. So let's start with a little bit more about how my job works and financial planning works. And like I said, it's more of a landscape. So there's a huge difference between managing your finances, taking action and creating a financial plan, and just purchasing financial products. Okay? When you create a financial plan, you're starting with an objective, starting with the end in mind, the end goal. People often come up to me and say, should I invest in this? Should I invest in a pension? Should I take out this product? You need to start with, what are you trying to achieve? Specifically, what are you trying to achieve? So for example, you might say, I want to retire in St. Vincent. I'd like to have an income of £20,000 per year. I would like to take my state pension. I want to live in a house that I own and not rent. And my property in the UK, I would like to leave that to my children. That is a specific objective, right? It's nothing to do with any pension, cash, nothing. It's just, this is what I want to achieve. So a financial planner will look at that, look at your current financial situation, assess what needs to be done, assess what areas of financial planning you need to focus on, and then recommend specific products or legal documents to basically achieve that objective. And that might be, a 10-year time frame, 20-year time frame, 30-year time frame. So often it will need to be changed and developed as things in your life change, as government policy changes, as the economy changes, everything. So financial planning is literally about putting a plan in place and then just reviewing that plan every year or even more frequently. That's what I do for my clients. But to understand how I can utilize that to help you and support you, you need to understand the key difference between financial advice and financial guidance and support. So financial advice is what I provide in my day job, and then financial guidance and support is really what I'm going to be doing for every member at the Wicked Multicultural Organization. And the main difference is that financial advice is bespoke. It's a regulated industry. It's regulated by the Financial Conduct Authority. There's 99% of the time there's a cost to providing it, and there's a specific process. Like I said, understanding the person's objective, recommending financial products, getting to that point, reviewing it every year, just like that. But like I said, it's very specific, it's bespoke advice, and I will implement it for you. That's financial advice. It's when I provide you with a recommendation and I implement that thing for you and review it on an ongoing basis. Now, financial guidance and support is more of what I do with the work with WIMCO. It's free, it's impartial. There's no guarantees that it's going to do the thing you want it to do. It's just an ability to understand more about what you're trying to achieve and then understand how this certain product can help you. It's financial education at the base level, support in understanding financial documents, understanding if you have a in any document from a pension provider or whatever, you can bring it in, understand what it means. What are your options? What options are available to you? You know, what option might be actually lose you money or make you pay more tax, or you know, there can be very, very specific things that you can do that will mean that you can lose a lot of money. You know, even accessing certain investments at certain times of the year, huge change. You know, signposting for whether it be state benefits or specific products like wills, power of attorneys, equity release. I may put you in touch with an expert who's understands that product specifically and say, look, based on your circumstances, you should talk about that specific product. And then you can talk to someone like Ed about wills, for example. So the main areas of financial planning, pensions. Pensions are a huge pensions are a product, first of all, but there are so many different types, there are so many different government rules, that they change all the time. They have their own sort of place within the financial planning landscape. Insurance as well. Insurance is definitely something that's not talked about enough, especially in our community. You know, there's a high risk of things like diabetes, you know, angina, heart problems. So insurance is definitely something that we should understand more, and how it can help us and how it can mitigate the risks of either losing income or you know, losing someone in the family that provides income. Investment, again, very broad area. And debt, and this is where we come on to how equity release a little bit. Debt can be utilized as a financial product to help you achieve certain objectives. Okay, it's the kind of thing that, you know, billionaires have been doing for years, and people say, oh, how they not paying any tax? Well, you can utilize debt as well. You know, you're just like when you buy a house, you're utilizing a debt by going through a mortgage, which is a financial product. Okay. So how can I support you specifically with the Wicked Multicultural Organization? If you have any provider documents that you don't understand, you can book a meeting with me, bring them in, and we'll go through them together. It's that simple. If you think about, especially with pension documents, there may be a number of options for you that you don't understand, you know, what makes sense. Things like accessing your pensions, going into drawdown, whatever it may be, bring the document in and we can go through it together, and I can help you understand what your options are. If you want more information about any financial related matter, you can come book a meeting with me. We can talk about it. If you want more information about investments, cryptocurrency, whatever it may be, you want to talk about it, we can, you know, book a meeting and then we can have a discussion. Provide introductions to experts on specific products like wills, like equity release, whatever it may be. If there's a certain product that you need to get specific advice for, I can point you in the right direction and explain the types of process you need to go through. Often I've seen or I've had meetings with people already that have had wills written that haven't been done properly, haven't done correctly, or haven't even been done to their completion. So if you have anything like that where you need help with, book a meeting, come and see me. We'll leave some contact details at the end as well, hopefully. Government benefits. If you don't know what government benefits you can have access to, we can have a look at that together. And I can signpost where you might need to go to make those applications. Applications is another thing. A lot of stuff is online now. And these applications can be very long. They can be very hard to understand. I can help you go through that, you know. Again, it's just guidance, it's not advice. So I can help you go through the form, fill out what needs to be filled out. Can't guarantee it's going to get you the result that you want, but if we can just make sure that, you know, something's been sent out to the right specific person, then that's, you know, you're halfway there. If you have things like dyslexia, if you're dyscalculia, it can be very hard to fill out these types of forms. So book a meeting, come and see me. We can go through it together. Right. Financial education part of the presentation. Now, like I said, when I said about the landscape of financial planning, right? There's lots of different things you need to understand, but you don't need to be an expert in anything. You need to understand that there are three elements. There are products, okay? There are products that you can utilize to your benefit, and there are investments or assets that you can put into these products, right? And you can utilize debt. Debt can be utilized to your advantage as well. So the difference between products and investments specifically, very, very important. To give you just an example straight out the gate, a pension is it's a product. It's not an investment. You can't compare two pensions. They do exactly the same thing. A pension with Standard Life, it's going to do exactly the same thing as a pension with Aegon or Aviva or any other provider. What you need to understand is what the investment that goes inside it is. That is what differs in its performance. So let's have a look specifically about some products. Individual savings account, ISAs, very common. Most people understand what that is. Again, an investment product. It's a product. You can put lots of things in ISAs. You can put cash, stocks and shares. You can have them specifically for children. Child trust funds are not really available now, but used to be. So some people have them in place. Help to Buy ISAs specifically for houses. Now, the lifetime ISA, all types of one product, individual savings account. Annuities, another product, an insurance product, but for retirement income, can be utilized in certain scenarios. It may not be a benefit to you, but in other situations, it might be a huge benefit to you. That can be a presentation in itself about how annuities can be utilized in a good way when they're beneficial, when they're not beneficial. Pensions, again, I would, as a very basic level, make the distinction between state pension. State pension is not a pension, it's a state benefit. It's not a product, it's a state benefit. Pensions are personal pensions, group pensions, what you get with your work. Everyone who's employed is investing some money into a pension. If you're employed, it's a government regulation that you have to have a pension. What goes into it, again, can be different, but all pensions are pretty much equal. They do some things slightly differently depending on when they were taken out, but they all do the same thing. Again, it's a product. Now, often, people know cash fixed term accounts, mortgages, wills and lasting power of attorney, which Ed will focus on later. Equity release is a way to utilize debt, essentially, release money from assets. If you have an asset, you can't spend that money. You can't sell your kitchen and release 10 grand from your house. No, often you have to sell the whole thing, but equity release can allow you to release the money from assets, okay? But there are different types of equity release, and not all providers are equal. So it's worth understanding a little bit more. And we have an expert who can talk about equity release specifically, and we'll invite you to a talk on that at another point. And people who are interested can tell me specifically. But like I said, with all these different products, if you have if you have them already, or if you inherited some or whatever it may be, bring the paperwork to me if you want more information and more guidance on how to utilize it for your benefit. So now we're going to talk about the investment element of that. So we have the products. What can go into those products? What kind of investments do we have? I mean, one of the most common types of investment is a property, buying a house. That is an investment, even though it might not seem like it because you're just buying a house to live in, but you're putting your money into an asset that can increase and decrease in value. Same way that if you put stocks, increase and decrease in value. You can take money or you can use debt to put money into small business, your own small business, someone else's small business. But there are other ways to gain access to this type of investment, right? You can put money into large businesses. So if you don't have enough money to start a small business yourself, you can put a very small amount of money into another business, a huge business like Apple, by buying company shares. Cash, is an investment. It might not seem like it because you're just putting your money away and keeping it safe, but that bank is going away and using your money. So your money is invested. If the bank fails, there is a risk that you can lose some cash, and your money is rising and falling in a different way because of the inflation and rising costs, but your money does go up and down in value. Up if there's interest at a high interest rate. And another way to access property is through property funds. If you can't afford to buy a house, you can't afford to invest in your own buy to let, you can invest small amounts of money into property funds. So you can get access to that market. And all of these things can be utilized or you can gain access to them and utilize them through products like pensions, like stocks and shares, ISAs, and other types of products. And like I say, the main thing to understand here is you don't need to understand property investment. You don't need to understand it. You need to understand that you can use it in a product and it can be utilized to your benefit, but you can get specific advice that can help you understand that if that is going to help you on your personal financial plan. So a little bit about debt. So loans, common type of debt, short-term loans, credit cards, business loans, all these different things can be utilized to your advantage, right? Business loans, for example. If you have a business already, or if you want to start a business, you can get a business loan. This way to get capital to invest in a business that you own. Now, obviously, it's one business. If it fails, then you lose a lot of cash. It's a specific type of investment, very large one. But as I said before, you can gain access to other people's businesses through stocks and shares, through pension funds, mutual funds, other ways. This is just another way to invest by utilizing debt. Mortgages, again, a debt product, and there are different types: interest only, fixed term, offset. Mortgage brokers are experts in that field. They can advise you on how specifically you can utilize a mortgage to your benefit. Equity release. Again, there are two types of main equity release: home reversion plan and lifetime mortgage. It can allow you to get tax-free income. So when I compare that to sort of what billionaires have been doing, they'll often use assets to release money for a tax-free income. Equity release is just a smaller version of that. You have a large asset, you can release money from it tax-free as an income. Now, this is mainly going to be for older people from the age of 55, but it can be utilized in the right way. So as I said, if you would like more information about any of this, then you can come to me and we can have a conversation. But equity release specifically, we'll have someone who's going to talk about it in a bit more detail, and we'll put out some information about a talk that we're going to do. So today, we're going to talk a little bit more about will specifically. Ed's going to do some work on that. But then, yeah, we'll talk about equity release another point. So at this point, I'm just going to hand over to my colleague, Ed, who's going to give you some specific information on wills and power of attorneys. Okay?
Perfect. Thank you, Nathan. I'll just start
Let me get
sharing my screen. Let's see. Can everyone see that at all?
Yeah.
Brilliant. Perfect. Good evening, everyone. Lovely to meet you all, and thank you for having me. My name is Edward Richings. As Nathan said, I'm a will writer and estate planner at ADE Wills, and I work alongside Nathan where he deals with the financial planning aspects of someone's estate plan. I work alongside him with the legal side. So what that means is I do wills, I do lasting powers of attorneys, and I can even discuss will trusts, so trusts within the will. So we do that as a more comprehensive financial planning and estate planning overview and assistance. So when I started out in will writing, one of the main questions I used to get asked was, do I really need a will? So I always like to approach that with understanding what happens if you don't have a will. So If you don't have a will in place at the time of your passing, then it will be the case that the intestacy rules will apply. So the intestacy rules are written by the government, and it essentially follows like a flow chart as to where your assets will be distributed. Because of course, a will is a legal document. You are saying in that document where you want assets to go, to whom you want to benefit, and the intestacy rules, if you don't choose, will choose for you. So with that in mind, looking at the application of the intestacy rules, um, you can see that the first question is whether or not the person who's passed away, the deceased, was married at the time of their passing, and then it goes down one of two different flow charts. If they're married, then the next question is, did they have children? And then, of course, there's a split. The spouse gets the first £322,000 and half of the rest, and the children share the other half that remains. If you're not married at the time of your passing, then the first question is, did they have children? And right off the bat there, you can see straight away, if we're in a long-term relationship, we're unmarried, then your unmarried partner is not being looked after. A lot of times people might make the presumption that we have a common law wife or husband, but that isn't the case. Even if you are unmarried, as the case is with a lot of clients we have, and you've been together, say, decades, and you've got sole assets, you've got your own bank accounts, all your money won't go to your unmarried partner. It will go to your children, or if not your children, your parents, or if not, further down that flow chart. So it isn't the case that we have that sort of nuclear family anymore where we have man, wife, kids, grandkids. A lot of the time we're working with clients who have got blended families, whether they've got previous relationship children, or they've got a second or third marriage now. And what happens is, if you were to have children from a previous marriage and you were to marry a new partner, then you have automatically, in essence, disinherited your children from a previous relationship. Because when you get married, marriage but not divorce revokes a will. So what this essentially means is, if, say, for example, we've got kids from a previous relationship, we get married to a new man or wife, even if you don't make a will, the making of that marriage, getting wedded to that new spouse, means that if you don't have a will, the intestacy rules will ask first, are you married? And it will go to your wife or husband, the first 322 and half the rest, and your children will only get a portion of whatever remains. So straight there, we can see that one of the big advantages of a will is, one, we're giving clarity. We're giving clarity as to understanding who's going to get what on our passing. We're giving reassurance to our loved ones, because if we don't make a will, it can be the case that the estate administration, the probate process. So probate is the process that after someone's passed away, it's the administration of the estate, collecting all the documents and the assets, giving out all the beneficiaries their wishes in accordance with the will or the intestacy rules. It could be a lot longer if you don't have a will in place. It can be messier. It could even be less tax efficient, because I won't go into detail about the inheritance tax thresholds and the inheritance tax exemptions and reliefs. But say, for example, we are married and we wanted everything going to our surviving spouse, that can create a lot more tax advantages than if a lot of our estate went to our children through the intestacy rules, because you do have the spouse exemption where things going to a surviving spouse is exempt from inheritance tax. But as I said, I won't go into the granular detail of that on this webinar. That's something, if you do have any concerns about inheritance tax, we can talk through that together, because that's part of the process of writing a will. It's not just writing the document, it's understanding your estate, understanding the inheritance tax thresholds, and making sure we're giving a tax efficient plan of action. And that's what we do when we take instructions. We go through your estate assets, understanding what you own, how you own, the values involved. And then if we have clients who go, like the other day, we spoke to a couple and they've got, with no word of a lie, £1.3 million inheritance tax liability. That's where I would say, okay, you need to talk to Nathan and you need to think about what plans you can put in place. And that's how Nathan and I collaborate to make it tax efficient. It's not just wills that we have to be mindful of, because wills, of course, are there for if we pass away, making sure everything goes where we want, because we're no longer able to say where we want it to go. The other part is, whilst we're living, it could be through accident, injury, illness. It could be through dementia. It could be from a stroke. We have clients with Parkinson's as well, MS, and lasting powers of attorneys, otherwise known as LPAs. They are so useful, and I've seen that there's a huge rise in demand for them in the last 18 months alone because of the benefits they provide. So, what is an LPA? An LPA is a legal deed. It's a document which allows you, the donor, to choose people you trust, known as attorneys, to make decisions on your behalf if you're in a situation where you don't have mental capacity to make that decision. What types of LPAs are there? There are two. You've got the health and welfare one, and you've got the property and financial one. With the health and welfare one, the key question there is about life-sustaining treatment. So life-sustaining treatment is any type of treatment, whether it be something big and drastic as a cancer treatment, or it could be an operation or surgery. It can be something as minimal as antibiotics, which are required to keep us alive following an unsuccessful operation, for example. It's anything that's needed to keep you alive. And the question that we have in the LPA there is, do we give that ultimate decision to our attorneys and they can talk to the doctors? Or do we give the ultimate decision-making power to the doctors and they can talk to the family? This is down to personal preference. Some people prefer family because it's heartfelt. They know us. We know that we can trust them to do the personal thing for us. And they don't want doctors because they might just make policy-based decisions and not take our personal feelings into account because our family know us better. Or it might be that we think, "Do you know what, this is such a big decision. I want the doctors taking lead because I don't want my son or daughter to have this burden of switching off the life support machine." So it's making sure that we have the right people that we trust to make those decisions. And the only way to do it is through an LPA. And we don't have to be elderly to make them. I'm making them quite a lot for young couples as well, because if you've got sole assets, like for example, a builder, he's a sole breadwinner, he's got his own sole trader account. If anything happens to him on site, his wife can't access that. So an LPA means that if, God forbid, he has like an accident, the wife can actually access it through the LPA and pay the bills through that way. If you don't make an LPA and we're in a position where we've lost mental capacity, then an LPA can't be made if there's no capacity of the donor. Instead, your family have to apply through the Court of Protection to apply for what's called a deputyship order. And it's longer. It can be about £3,000 plus you're paying for solicitors as well. And if you get solicitors involved in anything, they're going to rack up hours, they're going to rack up bills. It's just going to become a huge mess for your family during what is already a traumatic time. So it's about forward thinking and linking in with the financial aspect. The other type of LPA we've got available is the property and financial one. So with that one, it's not just when you've lost mental capacity. It's if you want, you can have your attorneys acting on your behalf with your express permission whilst you still got capacity. So for example, I've got an elderly lady. She's in Cowley, can't get to the banks in city centre, so she's still got capacity, but her daughter uses the LPA to go in for her. She's still got mental capacity, but physical capability is not there. So it just gives a little bit more flexibility. And linking in with, like, for example, Nathan's work, if you've got a property and financial LPA in place, it means that, say, for example, God forbid, we're in a position where we're not able to talk to Nathan and say what we want being done. He can still work with your attorneys to make sure your investments, your pensions, your life insurance policies, all your ISAs are being looked after and managed accordingly. And then when you recover, you've got that all in place because someone you trust was able legally to talk to Nathan. And an LPA is a legal deed. It's there to protect you. Your attorneys, if you are worried about trusting them, there are routes that they can be held accountable. They are guided by the Mental Capacity Act 2005 to act in your best interest and your best interests alone. They can't go in and start doing everything they want with your money. They can and will be held accountable through the courts of law. And so, in terms of how it all works, as I mentioned, part of the process that I do is when it comes to will writing, I'm very much a case of it's an unregulated area of work, whereas financial advisory work is regulated. Will writing is not. So you have to be, and I understand Nathan mentioned at the beginning about trusting who you work with. I agree completely, and that's so crucial. One of the biggest things that premises everything I do with my clients is integrity. I always like to have an initial call with my clients because it's important for me to understand what your priorities are. Is it children? Is it guardianship? Because a will is the only way to legally appoint a guardian if we have children under 18 if we pass away. Is it inheritance tax planning? Is it property ownership? Is it international assets? I want to work with you and understand what your deadlines are and work accordingly and accommodate my services. At the same time, it's important for you to get to know me because you're going to have to trust me with personal, employment, financial, property information, and family. So I take that all very seriously. And will writing's unregulated. There are a lot of cowboys out there. I got a lot of clients who come to me and I read their will to them. And when I look through it, I'll read it back and it doesn't do what they need it to do. And this is very concerning because if someone wants to pass away, it's too late. So my purpose in life is to be your voice for when you're not here. And it's important that you have clarity. So with each will we write, you've got a clause clarification guide, which summarizes the purpose and effects of each clause in your will in layman terms, no jargon. So you've got clear guidance in black and white. But even at that point, I always like to have calls and keep changing the will until my clients are happy. When we come to take instructions, we're, as I mentioned, we review your estate. We understand what assets you own, what nature of assets, the type of ownership, because there are some ways that can be overriding the will. So if you jointly own your property, are you joint tenants? Are you tenants in common? Do you want to protect half your value from the care home fees or sideway disinheritance if your surviving spouse was to remarry? We talk about all that. And when we go through the estate assets, as mentioned, we go through the values for inheritance tax purposes, but I also then refer you on to Nathan, who will then go through your investments, your ISAs. I can give him the details of the values. He can talk through what will be good tax planning wise. So we're not leaving a huge tax burden. We try to stop it all going to HMRC and go to our loved ones where we want it to go. And that's the coordination that Nathan and I enjoy together. So essentially, it's just a case of a will ensuring where your wishes go after you pass away, and an LPA ensuring that if anything, God forbid, happens to us during a lifetime, the people we trust will look after assets. And in both instances, Nathan and I can work together. I know if there's any questions, but I'll refer back to yourself, Nathan, and then I'll let you lead again.
Thanks, Ed.
Edward, eh, eh, it might be if you can show that flow chart just for 1 minute, because there's a few people that joined. That is
Yeah.
a key document. If you could just show that and explain that for a minute, so that everybody can grasp exactly what you mean, because that really is an important one.
Yeah, of course, definitely.
Yeah,
So,
appreciate it.
of course, so this is the intestate rules flow chart. So, a will is a legal document saying where we want everything to go. But if we don't do that, or we don't have a valid will in place, so what does that mean? Say we make a will, but we got married afterwards and we didn't make a new will or didn't put a contemplation of marriage clause in the will, we have passed away without a valid will in place. And so this is what the government has created. It's a flow chart saying where everything is to go. So the first question is about marriage. If we're married, then the left side will apply. If we're not married, then the right side will apply. And as you can see, the statutory legacy is what it's called, but it's the £322,000 there. So it has increased because it was 270, but it's now 322. So if you own more than £322,000 in your estate, the first 322K will go to your spouse. The other half, oh, sorry, whatever remains, half of it will go to your spouse, half will go to your children equally. And you will get the spouse exemption on whatever goes to your spouse, but whatever passes on to your children, they will be taxed if it goes over your nil rate band. And this is where we need to know our thresholds. We need to know, okay, how do we plan it? The right side is a case of if you've got, say, for example, children, that category will inherit at the exclusion of all the ones below. So what that means is if, say, for example, you don't have children, both your parents are no longer around, but you've got one brother, no half brothers, and you've got your grandparents, the brother will inherit at the exclusion of grandparents or aunts and uncles. And as sad as it sounds, we may not enjoy close relationships with certain family members. One of the things I've come across more frequently is we have a lot of family members who have become distant or fallings out have happened. And it's not that we want to benefit certain people. I find that there are quite a lot of cases where there are people who want to stop certain family members from benefiting from their estate. And that's as much of a reason to get a will for some people. So that's the flow chart. If we don't take action, um, that's what will happen to our estate.
Thank you. Thanks for that.
My pleasure. Thank you.
Thanks, Ed.
That's all right.
Well, this is a specific example about how having someone speak about certain products specifically and how they work can really help us, right? And I can advise, I can guide you and say, this is important. This is an area we need to consider. But sometimes you need to speak to someone about how to implement that in general. Okay, so how do I implement a will? How do I implement a power of attorney? So that's what more I was talking about in terms of the landscape of financial planning. Wills and power of attorneys are part of that landscape. Now, the idea is on an ongoing basis, we want to educate the whole community about all of these things. We want to understand which areas are in need. Wills and power of attorneys is probably one of the things that I've heard about most. People have asked questions about most. So I thought it was important to get Edward in. But we're going to have hopefully some more talk specifically about certain things, and we can go into a bit more depth. But really, what I want you to take from this today is the landscape of financial planning, how you can be efficient in ensuring that your finances are in control, right? How you do that is by understanding the objective first, where you want to get to, understanding the kind of products that are available to help you, understanding the state benefits that you are able to get, and understanding how those all work together. Certain incomes, certain state benefits is going to increase your tax liability. All of those things work in tandem. It's very, very difficult and very, very inefficient to recommend or think about certain products or investments in isolation, because getting one thing is going to impact another part of your life, right? Whether that's a tax burden or, so taking a pension, for example, might mean that you're not able to access certain benefits, right? So all these things can impact each other. That's why we have to look at it from the landscape, financial planning, with the end in mind, and take a step out. I'm going to go back to the slide and share my screen very quickly. Okay, so yes, so today with information on wills and power of attorneys, I want to invite you, we haven't got a date set yet, to another talk, which is specifically about equity release, another product that we can talk about in way more detail and understand what types of people that can help. So if you're interested in that, contact me, let me know, and then we'll get a date set for that. But generally speaking, I'm here for general support and guidance and education, and to help you understand more about how financial planning can help you, understand more about how you can utilize certain things. So like I say, bring your documents. If you have questions about finances in general, come and talk to me. If you want to know more about specific products, then we can organize other experts to come and talk to us as well. And I'll work with Brian to put those in place, do webinars, or we could have in-person meetings at Hilltop. But I want to open up the questions and then just leave my contact details up here as well. If I can just get this to work. I don't know, Brian, if you can see.
Yeah. Okay. So yeah, we can see that your contact details. Okay. Is there any questions? You can come off of mute and ask a question.
Yes, I would like to ask a question with regards to the LPA. Basically, I need to know, and this is for both the property and financial and the health and welfare, the cost element for having an LPA.
Why don't you start, Ed, on that question, and I'll pick up from you.
Yeah, of course, definitely. In terms of the costing element, Sonia, are you asking about the OPG registration fee or the service fee from myself?
Both.
Yeah, of course.
Both, yeah.
So with the OPG registration, what that means is when we make a will, the will doesn't need to be registered anywhere. With an LPA, it needs to be registered with the Office of the Public Guardian in order for it to be validly working. So to register it, it's usually £82. But what I understand is on the 17th, that's going to change. So that's going to go up to £92 per LPA. I think, in my personal opinion, it's unjustifiable that they keep increasing these prices, but it's
Okay.
£92 per LPA to get it registered with the OPG. If you want my assistance along the way to make those, then just to make, so if it's just one LPA, two LPAs just for yourself, the health and welfare and the property and financial, it would be, if we meet online, 585, and that covers everything. So that's £585 for both LPAs. We can meet on an online call, we can talk together and get the instructions. I will then come to you to make sure we sign it in an order, because it's got to be signed in a specific order for it to be valid. It's got to be donor, certificate provider, returns, replacement attorneys, and then donor again. So I'll be in charge of all of that, and then I will send it off to the OPG for its registration. So yes, that's the answer to that one. Yeah.
Okay, thank you, Edward. Just one more question. So that 585 is just for myself. So if my husband, we need to do two separate one, would that also be 585 for him as well? Or can you do jointly between husband and wife with not particularly one fee, but a discount, if that's the correct word? Because I appreciate that you would, for the registration, it possibly would be £92 as it's going up each.
Yeah. No, of course, it's a good question. Thank you, Sonia. It's yes. How I based the business was I wanted to try and make it as cost effective as possible across all grounds. So yeah, for couples, it wouldn't be 585 for you and 585 for your husband. It would be all together, top of my head, I think it's 825 for all four. So I do it so that it comes to a discounted rate, because we do couple packages and we do single packages. It's the same kind of rate applies for if you were doing will writing services as well. We do couple packages to discount it down and make it cost effective.
Brilliant. That's great. Just another question with regards to wills. You do mirror wills as well as individuals? Because I have a little understanding concerning mirror wills, and I'm not happy with that. And that's purely because of circumstances. But say, for instance, I've done my LPA, and I just want to make a will for myself, not including my husband, because he can do his own. Can you do that for me? Would you
Yeah.
you would be?
Yeah, definitely. In terms of your understanding of mirror wills, you don't have to if you don't want to, but just want to, would you be able to share what your understanding of a mirror will is, which gives you concern? And I can probably clarify it for you if you're happy to share that information, that is.
Well, what little I know of it, mirror will is say for instance, my husband and I, it would be this, we would have the same will. So if I die, then he takes whatever he has the, am I getting it right, or is it wrong? That's my understanding. A mirror will is that both we do it together.
No, of course. I'm glad you mentioned it because it is something highlightable. It's one thing I'll clarify between is you've got something called mutual wills and something called mirror wills. And this one you haven't mentioned, but I'll just clarify because sometimes that word gets floated about. But a mutual will, I spoke to a client a couple of days ago about it, is where a man and wife will make their wills together at the same time, but there's an agreement that they can't change it without the other's permission. That's a mutual will, and I would highly recommend anyone against that, purely because it causes all trouble if one passes away. Now the other can't do anything to their will, and a constructive trust is put over all the assets. They're tied up essentially. So what we would do instead is something called a mirror will. A mirror will doesn't have to be exactly identical. It can be broadly similar. There can be subtle changes. Talking from a legal perspective, yes. If you're married, I have lots of married couples. It can be for any reason. They might be, I've got an elderly couple who all joint assets, but they're both got completely different views. So the wife has it going one way, the husband has it going another. If you've got children from previous marriages, then you might want it going split to benefit your children. The husband might have it going elsewhere. So they don't have to be identical. From the service provider perspective, if you and your husband want to do it at the same time, but you have different views and you want to do your wills differently, yes, I would do a mirror wills package for you to make it more cost effective. And even though I'm essentially writing two wills, one for yourself, Sonia, and one completely different one for your husband, absolutely fine. I can make it more cost effective and do it as a mirror wills or couple wills package. It doesn't bother me from a service provider perspective.
Okay, thank you so much for that. That sort of made it a little bit clear. I've crossed out the mutual will, and just one more question. Sorry to be taking up all the time. Concerning wills, if you do not have joint accounts or you have assets that are not joint with your partner, that mirror will, would that still be an option?
Yeah, of course. So is this, just so I get it correct, is this a case of yourself and your husband having sole assets, not joint? Is that correct?
In some, not in everything, but in some things.
Of course, you can do mirror wills completely. The way to look at it is the will isn't, the nature of having a mirror will isn't impacted by the nature of you having only joint or minimal sole assets. Say, for example, you and your husband have both got completely sole assets and no joint property whatsoever. You can have mirror wills going wherever they go. If you've got joint assets, then one thing to highlight is some joint assets, the way they're owned, might override the will. So as I mentioned, you've got two ways to co-own property in the UK. You've got a joint tenancy, you've got a tenancy in common. I know those sound like legal, technical terms, but I can go through that in more finer detail if you want to have a follow-up chat, anyone, and I can talk through what the impact is. But essentially, if you own your home as a joint tenancy, then it will override the will provisions. If you have the bank account in your joint names, then it might be that, say, for example, you've got a husband and wife, they co-own a NatWest account, an ISA. If, say, for example, the wife is really adamant that she wants it going to her daughter, it's a joint asset, it will override the will and it would just go through to the husband as a sole survivor. So that's something to just bear in mind, that joint assets can override the will. That's where I like to look at the nature of the assets, and that's where we then tie in whoever's needed to maybe change the co-ownership, that kind of thing. So yeah.
Okay, and finally, Edward, would you give or share your contact details so that I can probably speak to you personally, or do I have to go via the Hilltop Wimco?
entirely up to Nathan. Nathan's in charge. I'm happy to put my
Oh,
contact details
okay.
in,
Yeah,
but
yeah, you can.
Nathan.
yeah.
Do you have anything on the screen on your presentation?
Sorry, say that again.
No, I was just asking Ed if he has
Oh,
some
okay.
contact details he can share on the presentation. If not, just call me and I can share whoever needs the.
Yeah, I'd say go through Nathan because obviously we want to make sure we're tracking everybody that goes through. So go through Nathan and then
Yeah,
Nathan pass it
brilliant.
to Edward.
I think
Brilliant. No
thank you
problem.
so much, Sonia, for those questions. And I think this further highlights my point with that. When we're talking about specific products, it's important that you get specific advice, right? Because everyone's gonna have a different situation. You know, wills are it's gonna be complex. Families are complex, so wills need to be as complex to match that. I've got 4 half siblings. I know there's gonna be problems when passing down assets and whatnot. So it's important that when you want to consider a will, you don't just go and write one. It does cost a bit of money, but it doesn't cost anything to go and speak to Ed and understand exactly what you need, because getting the advice first and understanding what you need to put in place is so key, rather than just writing a will with anybody and then putting it down and it doesn't do what you need it to do. So the advice is key. So I would recommend anyone who wants to talk about wills generally, you can come and speak to me. But if you want specific advice, I'll pass you to Ed and he can provide, what exactly you need to put in place and how much it's going to cost. It's going to be different based on your own situation. Any other questions?
I was going to raise, I think, if it's okay, about wills. Because we haven't traditionally taken wills as seriously as we probably should do, I think it's really important to highlight this thing about intestate, which he showed, and I think Brian was trying to bring us towards it, and that is, I don't think people understand the fact that if we don't do the will, then somebody else called the government will tell your surviving partners what will happen. And I've had that experience myself, where my dad remarried, and the assets that my mother owned in the first marriage all went to my dad. So then when my dad passes away, all of my mother's assets didn't come to me because he didn't do a will. As the intestate rules said, they all went to his wife. So I'm then left in a position where nothing of my mother's hard work has ended up with me, because my dad failed to do a will and didn't realize that the government dictates what then happens. So whether we believe in a will or not, somebody else is going to tell your survivors what's going to happen, and it's not going to be you.
Good point.
It's true. I'm so sorry to hear that you had that experience, Ken. It is it's hard because I think forward thinking that exact situation is exactly what a lot of clients look to try and avoid now when we talk about it. I spoke with a lovely couple a couple of weeks ago, children from previous marriages on both ends, and they enjoy different kind of relationships with them. But at the end of the day, it's just like you say, when we've worked so hard, we want to make sure it's going to who we love. And of course, we want to make sure we're benefiting our surviving spouse, but we also need to take into account what happens if a surviving spouse remarries? What happens if they go into a care home? Will it be all lost to the new man or wife? Will it all be lost to the care home fee local authority assessment? Could they also not even just get married, but get, as I've seen in other cases, man passes away, or elderly lady, a man comes in, befriends her to try and not get married, but just get a good friendly relationship to try and take that inheritance. And what we want to try and do is, how do we have that balancing act? And there is a good solution available. Of course, I won't go into detail now, but we can create certain trust elements in the will, which allows to benefit the surviving spouse, but also balance that interest with making sure that if the surviving spouse wants to remarry, cohabit, go into a care home, we're looking after our children. It goes back to our kids. So no, thank you for sharing that, Ken. I know that wouldn't have been easy, so thank you.
Can I ask a question, please?
Yeah, please.
All right, Andrew.
Yeah, okay. Hi, everyone. It's Andrew Humphrey, Melissa's husband. So I'm going to ask about wills. So Melissa's on the call as well. So that could be a bit big. But I had a will. I've had a will since we've been married, but our circumstances have changed, which is didn't have kids at the time. And my will is, I think, about 20 years old. Do you suggest looking at my will and updating it? Obviously, my circumstances have changed, or our circumstances have changed. We've got kids now, so that's one thing. And I think my will was based on just the two of us at the time. Is it worthwhile possibly looking at your will and my will and reviewing it at all? And that could be the same for multiple people. It's a general question, really.
No, of course, definitely. I think it's a really good point to highlight. It's when we make a will, it's legally valid once we sign it in the presence of two independent witnesses. But from that date onwards, it's so important to keep making sure that it's contemporaneous and it's updated to reflect our current wishes. Because as you correctly highlight, Andrew, where we were 20 years ago is very different to where we are now, and in 20 years' time, it's going to be so different. So I like to think of it as a living document. People always think of it as a document about passing away and death, but I see it as a living document which reflects where we are now. In terms of updates, I would always say after a certain event, being a birth, a passing away in our family, marriages or divorce, or if we move house, they're good times. But in any instance, every 3 to 5 years, you don't need to update it. I would say review it and just see if it's still doing what you need it to do. So yes, definitely 20 years. I'll be more than happy to look through, make sure we're getting it to the kid, care home fees, all these things that we just mentioned, seeing how we're making sure we're forward future planning. But also, as I said, updating it is so crucial. It's as important as writing the initial will. Because as Brian and Ken have highlighted, intestacy rules, if we don't write a will, the intestacy rules government will write it for us. Our 20-year previous self will be writing it in a completely different mindset to where we are now. So it's probably going to go to the way that we don't want it to go to now. So no, definitely more than happy to just review your current will. And sometimes it's not just about reviewing the will to change the will. Sometimes I like updating wills after 20 years or 10 years or 5 years, because I get to review the estate as well, and your whole assets would have changed. You might have loads more money compared to what you used to have. You might have paid off your mortgage. You may have got a new mortgage. That's where it's good to review the legalities of it, and then also get someone like, say, get Nathan involved to then look through the financial side. And maybe it might be that we need some more protection. Have we got our mortgage and life insurance policy in place to protect the mortgage? Have we got now a huge IHT bill? Nathan, that's where I collaborate with him to make sure we're getting that comprehensively reviewed.
Okay. Yeah. Thanks for that. Thank you,
That's okay.
Edward. Thanks, Nathan.
Like Andrew, just to make that point clear, so like Andrew, I had a will that was probably 25 years old, and I just recently changed it, and it was way out of date. Had I passed, Andrew, in those years, it wouldn't have gone to the people that I wanted it to go to.
And that's what I think.
Yeah. So honestly, yeah, definitely use Edward or speak to Nathan.
Yeah. Thank you.
Right, we 6 minutes over. So any more questions? Has everybody taken the details? We'll definitely send this video out to the community to make sure that we can maximize. Oh, here we go.
Hi,
Dion.
good evening. Yeah,
Go on,
sorry,
Dion.
good evening. Sorry, I've come on late. Hi, good evening, guys. I have a question. I've mixed with people in different countries and obviously talk about money and whatnot. With regards to wills, is a living in trust will the same as a regular English will? I'm hearing this word come up. This is in America, living in trust will. Is that the same as our regular UK will, please?
I'll be honest.
Nathan?
Nathan.
Yeah, no, you go ahead, Ed, because this is your...
Any one of you, yes, please. I'm just trying to, I was going to Google it, but as I'm online, it's been in the back of my mind. So I thought, let me ask this question.
No, it's good because it highlights the ambit of how I operate. So I'm only able to give advice on anything within the England and Welsh jurisdiction. So what we do is if there's anything specific, like what does this mean in America or other assets in other jurisdictions, I
Right.
always, as Nathan does, you get the expert involved. I can't, that's the integrity part. If I was to talk about property in detail or divorce law in detail, I would be selling you something that or telling you something that
Mhm.
I don't know. So I would say that we do have clients who have international assets and jurisdictions. The way I approach it is I always say have a will covering your UK assets. If it's
Yes.
something in the EU, if you've all got anything in the EU, we can work it in the UK will in a certain way, which I can talk
Right.
through. If it's something outside the EU, I always say talk to a specialist or a solicitor or a lawyer in that jurisdiction, get the advice.
Yes.
And it might be
Mm-hmm.
that you need a will in that country to work
Yeah.
alongside the UK will. And that's where I make sure that I've got the UK will working in
Yeah.
conjunction with foreign wills. But no, I'm glad you said that because that highlights the ambit of where I work.
But what I wanted to know, Ed, is that do you know, have you heard of that before? Living in trust. Do we live in trust will? I just want to know, is it the same as a will? Or is that just another terminology for saying a will? I've just heard it, living in trust will. You're
As in-
alive, you're living, but you've done your will, living in trust will. Have you come across it before?
I've heard of living will. So a living will in the UK is
Mm.
essentially where you refuse consent to certain types of treatment in future. That's a
Oh,
living will.
okay.
You've got a life interest trust in a will, which is a certain type of mechanism you can create to split kind of like the beneficiaries a certain way, which I'll go into in a personal one, of course.
Yeah.
But living in trust will, if that's an American concept, I would say talk to someone in that state jurisdiction to see what it means.
Okay.
I'll be honest, I may have come across those terms, but I have no idea what a living in trust will could.
Maybe it's just living will, maybe. Living will, okay.
Yeah, I wouldn't know if it's American. In England, that's what a living will is. It's kind of like an advanced decision, otherwise known as here.
So a
Okay.
living will, could you say that again, please? What a living will is? How does that differ from a regular will? Is it the same thing or is it? I didn't quite understand what you meant there. In
No.
England.
Yeah, so in the UK, you've got a will. So a will is a legal document where you say all my assets are to be distributed in this way when I pass away.
Yes.
And then you've got a living will, so LIVING gap,
Yeah.
which is something which you write, which says nothing to do with how your assets are distributed on your passing, but all to do with the types of medical treatment that you might want to refuse, like a do not resuscitate kind of thing, in advance.
Oh,
Yeah, so it's a VAT.
okay.
It's my understanding. That's living will. I've known
Okay.
in the UK.
Okay. Thank you so much. I appreciate your help. Thank you.
Okay, it's okay.
So we've got a question from Marva. Marva, do you want to unmute?
Hi, good evening, everyone. Just a quick question. So just to clarify, you're saying that your jurisdiction is within England and Wales. So I'm assuming that that does not cover any British overseas territories.
Which one have you got in mind?
So if I have assets in, say, Anguilla, which is a British overseas territory, does that mean that I would then have to do a separate will for any assets in that country?
So it's a little bit of it could be. And
Okay.
if I may just for 1 minute just explain why, it's because there's a difference between what's called movable and what's called immovable assets. So if you have movable assets, which can be tangible or intangible, it could be, for example, tangible like a car in another country, or it could be like pensions and bank accounts in another country. They could go through your UK will, provided certain conditions are met. Like, for example, you are domiciled in the UK for tax purposes at your time of your passing, that kind of thing. If you've got immovable assets, so land, farms, buildings, those kind of things in a foreign country, then they will pass in accordance with the local laws of the land in which they lie, which can override the UK will. So with that in mind, I would say that it depends on the type of property, but following the guidance that I always get whenever I chat to the technical team at the Society of Will Writers, they always follow the same precedent, which is why I would adopt, which is regardless of what kind of asset it is, I would always say talk to a lawyer in that jurisdiction. They could say, yeah, you definitely need one, in which case the best thing to do is just have that certainty, have your UK will and your foreign will acting together. And that means I would have to write your UK will in a certain way just to make sure it's not overriding or revoking that will, but working alongside it. But they might even say, and I can't speak for them, but they might even say, no, you don't need to worry. It will go through your UK will. And if they say that, you've got their clarification in writing. Perfect. Then you've got something from another solicitor or lawyer, sorry, saying it will go through here. So yeah, it's kind of like that.
Thank you.
It's okay.
Okay. Any more questions?
If there's any other questions, you know, you can always pass them to me, and we can have either another talk or we got, you know, I can get Edward to speak to you personally.
Great. Okay, certainly, you know, my final comment on this subject, especially on the wills, we're seeing lots of families break up and fall out over, you know, parents not leaving wills. So it'd be key if we can spread the word, make sure that we can all have wills so that we don't have this sort of breakup with our children, which is going through in my generation, where we're families that have been close for many, many years are now not speaking because of the will. And we don't want to pass that on to our kids. So I certainly recommend going through Nathan, going through Edward and doing it. Okay, so no more questions. So I think that's it. Thanks, Nathan. Thanks, Edward. We certainly have we've got a follow up with Ken in terms of equity release. And oh, Andrew's coming through. And maybe in the spring, we can do one on just wills alone. But Andrew, do you want to say something?
No, I was just passing on my reactions of the clap and saying really enjoyed it.
Oh, okay. Okay.
Yeah.
Everyone, yeah. Oh, yeah. I'm just getting.
Yeah.
Oh, I'm getting some. Oh, I see. That's what it
Yeah.
is. Thanks, Mara.
Yes.
First time, Sonia. Okay. Thanks a lot, everybody. Have a.
Thank you. Thanks,
Bye.
everyone.
Thank you very much.
Hang on. Oh, is he gone? Yeah. Do you want to hang on?
Yeah.
Yeah. Okay.
Thanks, everyone. Bye.
Thanks, everyone.
Thank you.
Bye.
Thank you. Bye.
Yeah, bye-bye. Thank you.
Yeah, Ed, do you want